And joining us now, former BB&T chairman and CEO and current executive in residence at the Wake Forest School of Business, John Allison. John, good morning. Good to have you here. Not an easy job for the Fed at the moment. We have a meeting in 3 weeks. The bond market, inverted yield curve, seems to be saying the Fed is too tight. But we also have to, I guess the Fed feels it has to filter in current data and implications of the trade war. So what's the correct policy, short and long term, for the Fed right now?
Well, good morning, and I think that's a very difficult question for the Fed. I think the challenge for the Fed is that they have discretion to kind of arbitrarily decide these things, not within the context of their models, but their models are modified to fit what their intuitive judgments are. I have strongly been an advocate of the Fed having some kind of rule. I personally like a nominal GDP rule or a money supply rule. It's interesting, in both cases, nominal GDP and money supply growth, looking at M4, have been pretty healthy in the 4.5%, 5% range. And neither one are saying, hey, you ought to be cutting rates aggressively. Now, a minor rate cut, which I think the Fed's going to do, is not really going to make that much difference. So I think we're going to see a minor rate cut, but I don't think the real economic phenomena suggest a major direction of lower rates. And by the way, I want to emphasize something you were just talking about. I think this message from Bill Dudley is scary. People should think about the awesome power of the Federal Reserve. When a recently retired member of the Federal Reserve decision says, hey, we can influence political elections, and they can. They know that. Whether people will say it openly, and I think the Fed will deny it openly, somewhere in the back of their mind, they know that, and that's one of the reasons we need a rule. We need a rule because it creates less ambiguity in the markets, and also it puts control on the Fed itself. Human beings are human beings, and the temptation to get involved in the political process when you're under political attack is pretty large. And I think people ought to be concerned about that implication.
Yeah, that seems to be most of the reaction to Dudley's comments, although I suppose you still need humans to set where the rule is. If you thought nominal GDP targeting at 4.5% is the correct rule, that would mean maybe the Fed doesn't do much of anything in September or beyond, or not at least more than a quarter point. The bond market seems to think that's not appropriate right now. Do you think the yield curve does not have implications for this?
I think the yield curve is an indicator, and I'm always concerned about that. And maybe you have to have a more sophisticated rule than just nominal GDP. You may have to have some additional characteristics to it. But I think the rule within a pretty small range would be better because markets could then anticipate where the Fed's going. And I think there's a limit on what monetary policy can do. I mean, the fact is that it's real production of real goods and services that matters. And you got to look at physical policy. So I think it's, when you don't have a rule, when you don't have some kind of controls, the temptation is for the Fed to try to do a lot more than it's really capable of doing, and for markets to expect it to do more than it's capable of doing.
John, just curious about whether you're having these conversations with anyone in the administration. I remember when President Trump got elected, your name was out there as someone who could potentially join the Federal Reserve Board. Is that still in contention? Are you still in touch with the White House on some of your strong views on this?
I've expressed my views, but I'm really not interested in joining the Federal Reserve right now because I think it needs more change than the people that are involved with it are willing to be to do, and I don't want to be sanctioning something that I don't really agree with.
Yeah. All right, fair point. John, thank you very much for checking in with us this morning. Appreciate it.